Welcome at the new edition of the Market Reporters. I don't want to talk about TikTok, but it was just in the news before we started.
We have to mention it.
Yeah. So it was just announced that this weekend, I think it's Sunday, that TikTok will be removed from the App Store and the Play Store.
Correct.
So let's see what happens next week with all the companies that are involved.
Yeah, absolutely. Well, and also the impact on the publicity.
Publicity of what?
On TikTok. I mean, we talked
The
about
advertisement.
The advertisement, yeah. So if you talk about before the Netflix documentary of the social dilemma, it's the business of TikTok, of course, is the advertisement. So that will have some impact. I think so.
Okay, if we look back, the Fed this week came together and they close down with a press conference where they announce what their focus is for the next period. And the market was hoping for some extra stimulus for the market, but they said, okay, we don't do new things, but the next 3 years we will control the interest rate between 0 and 25 basis points, so between 0 and 0.25%. And the market didn't respond very positively because they're always hoping on more.
Yeah.
But it's also, I think it's a strong signal for investors, mainly for investors, a little bit less for traders, because a lot of people were thinking that in the future, maybe in the short future, that the interest rates would go up.
Yeah.
But it's quite a statement that they say, investors, for the next 3 years, don't expect anything from your saving accounts. So that can be a
signal.
It can be a signal, it can be a push for other asset classes.
Yeah,
so for
trigger.
stocks, for old cars, whatever. So this is great. This is not great. It is an important signal.
Yeah.
So I think that's how you can look at it.
Yeah, and I think it's obvious also why. I mean, you see the same thing in Europe with ECB last week. The quantitative easing, the monetary expansion. I mean, today was in the newspaper in Spain. Spain was the first time in 113 years that it was basically the highest level of government debt. Sorry. So if you look back, of course, this was all due to Corona. Spain had to spend 21% more. They had no income or less income, of course, than normal from income tax, but also the IVA, the VAT. But it is quite a signal. It might not be a problem because you see the same thing happening everywhere.
It is a problem.
It is a problem.
Yeah.
But Spain, when actually the first time they hit 100% debt to the GDP was in 2015. Same thing what happened in the United States. But it's a signal. If you look in the Northern European area, you've got government debts around 55%. I think Denmark is even at 46 or something.
Yeah, it's really low.
The Netherlands about 60. So, I mean, it is a really, really big problem. And for countries as Spain, I mean, they benefit from the fact that the ECB is buying such huge amount of government debt.
Short term.
So the money that they lend, it doesn't cost them that much, but it is a problem on the long term if you can't pay your debt back. You know? And also, what are they going to produce? I mean, over winter there was also on the whole Costa del Sol, 80% of the hotels will be closed down, and they don't know when they will open again.
Yeah.
And it's a really big problem. So it's scary, and hopefully they will get out.
But also some positive news this week. Huijsman,
Yeah.
they had really good last quarter. They made a profit of 200 million. It was more than expected in the market.
Do you know where it came from?
Yeah, because they sell clothes.
Yeah, I know, but was it a specific region? Was it online or?
No, I don't know that. I have to dive into it.
Because we mentioned H&M a couple of months ago, and then they were closing down quite some shops, but eventually they did manage to.
Yeah, you mean like offline, online?
Yeah.
We can look at it. But I think it's a positive sign, and I think it's also, it's not what you said. It could be online sales or offline sales, but it's not like a car. You don't buy a car online, so there's not a big delay in the sales that they had in the last quarter. So that's positive.
Yeah.
Snowflake had an IPO this week.
Big IPO.
And on the first day they gained already more than 100%. And that says something about the history there is about tech.
Absolutely.
But it's positive, and especially the positive for the people that made 100% in one day. Next week, Tesla with the battery day. It's also, Tesla was also in the news again, we don't talk about it anymore. But Eurostock, you want to say something about Eurostock?
Yeah,
I know that.
Also, we talked about, so positive I think is that, I mean, a lot of investors are investing in ETFs. You see that the United States, of course, has the largest chunk of the ETF market. And for the Eurostoxx 50 to stay competitive, they had to do something about the
underlying stocks.
Yeah, the underlying stocks. So what is actually happening is they're going to kick out 5 companies: Telefónica, BBVA, Orange, Société Générale, and Fresenius.
Yeah.
So for Spain, that is not really good news because they have at the moment they have 7 stocks in there, so 11% more or less, and they're going to go to only 3 stocks. So 3 stocks from the IBEX will remain in the Eurostoxx 50, and they make place for Prosus, Vonovia, Kone, Adyen, and Pernod Ricard. Pernod Ricard, amongst others, is responsible for the brand of Beefeater and other strong liquors.
Yeah, that's all for the short term. Last week we talked about Tesla that they were not incorporated in the S&P 500. Yeah. So the issuers of the ETFs don't need to buy that stock. In this case, the other way around. Yeah. They sell those stocks that
the
leave the
index.
Yeah.
So that this is the
short-term pressure on those stocks.
The history of the Eurostoxx, this is the largest move in market cap. So they add the highest volume of value of market capitalization to the ETF basket.
Yeah. Okay. I think it's also the banks went down worldwide.
Absolutely.
And that's also mainly due to the fact that the margins will stay low with the low interest rate, what the Fed announced, what I just mentioned. That's an important one to say. And also Asia. So we talked about Europe, we talked about
One more thing about banks. Sorry, that good thing is in Spain, CaixaBank, Bankia, the merge, it's gone through. So they're gonna.
Is it good?
Well, for Spain, they have. I mean, Spain was the country, and don't pin me down on the number, but I read in the Economista that they had 160 banks, cajas.
Yeah. Before the financial crisis.
Before, yeah, but that's what you're talking about 10, 15 years ago. But if you look now, that is gone down to I think about 25, 30. Yeah, in the Netherlands, you only have 3 banks basically, and then a few really small ones like Triodos, etc. I don't know how it is exactly in the UK, but Barclays is I think the largest one, Santander. But Spain was one of the most spread. They had cajas in every village. Every village they opened a caja cooperativa.
So, but the deal went through?
The deal went through, yeah. So 74% will be for La Caixa, and with the merge they achieved a 70% cost reduction until 2025.
And the amount?
The amount, they paid 4.3 billion for it, and if you look what the Spanish government paid for it in the past, or how much money they injected, it was 24.3 billion. So they actually,
I see a little gap.
There's a gap, absolutely. So the Spanish government paid too much, or they've written off a lot in a couple of years.
But it's 20 billion, and that's an extra negative.
Yeah.
Negative.
They won't get that back. They won't get that back.
Do you think they're selling it now for the too low price?
Well, if you look at the business model, I don't think so.
No, and I think on the other hand, Bankia was set up as a bad bank with bad loans, bad mortgages in it. So it's also good that they still receive something for it, and during the period after they build it up like 10 years.
Absolutely.
You know they kept the system alive.
Yeah.
Asia was also in the news that the Asian economy will shrink, so the total Asian economy will shrink for the first time in 60 years. 75% of the underlying countries will have a negative growth this year. So 25% will have a positive, and that's mainly because of China, that it's still expected that they will grow this year with 1.8%. And it's also a sign. And if you are investing in oil, then there are some reports that come out that are really interesting. And one of them is the report of BP of this week. It's the yearly, they give it out yearly, and they have an outlook for the long future. And they work with 3 scenarios, and none of them expect an extra demand of oil. And directly you see in the market a lot of of course, people they have some influence in it, and they give an opposite opinion. But it's quite a statement. So people that invest in oil for the long term, they should look at those reports because they're really really important. Is there something you want to share with us about the clients?
We talked about it many times before, and I think it's just interesting to share. I had a call at 1 o'clock with a client that wanted to hedge his position. What can I rather use, an option or a CFD?
Hedge position means?
Yeah, he wants to protect himself because he expects that the last quarter of 2020 will be very wobbly, basically. So he expects that the market will go down and eventually recover again, but he wants to make sure.
Sorry to interrupt you, but that's what I also. Until the elections of the US, there will be a volatile market.
Yeah.
Because you see all kinds of things are coming in the news, and you see how the markets are responding. So investors should be aware of that. So until election day, be careful. Probably it will be a volatile market.
Yeah, we looked at different possibilities. One of them was buying put options on an index, and then what he realized is that the underlying value of a put option on the Nasdaq is $110,000 US dollars. If you look on a put option on the S&P 500, it's $300,000 US dollars. So it's a big contract. And then if we look back on how you can do it with a CFD, if you take one CFD short on the Nasdaq, without giving an opinion if that's good or right or bad or wrong, 11,154 was the price of the Nasdaq. If the Nasdaq goes down to 9,000, one CFD gives you a profit of 1,150 US dollars. So it's an easy way for clients and for retail investors to see how can I have 50,000 euros in the US. I can with 4 or 5 CFDs I can protect my risk, and that's.
You explain it really in 1 minute.
Yeah, it's really difficult to understand if you've never dealt with it, but it's something that we can really help with.
But there are leverage products, so people should be careful and
cautious,
should be aware of the risk, do their homework, and then especially if you use it as an opposite direction to protect your portfolio or an individual stock, it can be really interesting. Good news for us. We are retail investors, we are private investors, and Bloomberg came out with some news this week in which they say that the professional investors are at the moment really interested in how we as normal investors act, because the group of investors is increasing because the market's positive, but also because of the fact that a lot of people work from home, they have more time, they have more possibilities to look at the stock markets. A new group of clients are coming. So I won't say finally, but we are really happy as private investors and the investors that we help every day, that the professional investors start looking at the group, because the group is getting bigger, and if you're getting bigger, then you are more interested. Positive news. Thank you for watching. Thank you. Hope to see you next time.